So who saw the alien files that Trump released?
Come on, are we going back to your alien prediction from our prediction, our 2026 prediction?
Yeah,
Crazy.
I think I was proven right.
Well, I think I was proven right
What?
that a geopolitical event might cause an heightened prices in the energy market.
What's Jay's alien prediction?
I
Seems
said we have
foreign.
proof of aliens, but that was actually a 2025 prediction. But then Trump released all these videos from all sorts of different times where they had unexplained flying saucers. But I don't know how that impacts anyone's investment portfolio. So maybe let's get right into the important stuff here. Episode 30. We did have a special guest last episode, so we'll get an update on kind of what's happening out there in the market. We're going to look at AI's impact on employment. That's obviously a hot topic that everyone's interested in. And then talk about data centers with the announcement of some local data centers being built here in Vancouver. So getting right into the thick of things, Craig, where are we at as we record here on May 19th?
It's always interesting, when we prepare for these calls, is trying to talk about what's relevant, and I'd probably say for the past couple of 3 months, it's kind of been the same reoccurring message amongst our team, where it's resilience within markets. I would say, in particular, equity markets. Here we are, outside of last week, within a stone's throw of new all-time highs in both Canadian and U.S. equity markets. Bond markets in them a little bit more shaky given some of the inflationary pressures, but I think we even said in our previous call, our podcast, that it's kind of this three-leg stool of strong corporate earnings growth, which with the bulk of S&P 500 companies reporting already for the first quarter, I think it was like an 84% beat rate, with revenue expectations 20% higher than consensus. So certainly it's not corporate America at this juncture that is seeing any sort of roadblocks or breakdown or anything. The other two legs of the stool, I will continue to say, are a bit of a red flag for us as portfolio managers. What's happened with inflation, and specifically what's happening with bond yields. I think as of today, the 10-year U.S. bond yield is at 4.65, which is the highest since July of last year. And I think the 30-year bond yield is the highest it's been since 2005. So that's a sign that the bond market is anticipating probably a little bit more of lingering inflationary pressures, with crude oil prices over $100 a barrel. That's something we as portfolio managers will continue to monitor closely in the months ahead. But earnings good, economic data pretty resilient, inflation and bond yields would be kind of the talking point right now.
The side of the inflation side, Craig, I think that it's still this kind of uncertainty in the market where, is what's going on in Iran and the elevated energy prices, is this a short-term thing, or is this going to drag out a lot longer than, what we originally anticipated? Our last call, we did have a speaker on, she addressed a bit of that. I'd be hard pressed to think that the U.S. government, particularly Trump, kind of heading into the midterm elections, want to see this continue and want to see inflationary pressures coming into, out of the summer of this year. And, if you see some resolution of some sort in Iran, that plays well into his hand. If you don't, it's going to be a disaster for him, I would think, from a midterm perspective.
Yeah.
So I personally think when I look at that, and I think, it's interesting. You have this kind of you have this disagreement, I guess we call it, in the market, where despite inflation, despite higher energy prices, which historically have weighed on the economy, you've got markets continuing to break out to all-time highs. And I think part of that, and we'll talk about this a little bit later, is the AI theme. I think a lot of this, huge investment in AI is carrying this economy, and not necessarily looking at the risk of, not directly looking at the risk of energy prices potentially staying elevated for longer than what was expected. If that continues, that's going to be a drag on the economy.
Yeah, and the wild card is really this potential shift in central bank policy, because coming into this year, market expectations where we're going to see another 25 or potentially 50 basis point cut, Federal Reserve and Bank of Canada. While bond yields again are telegraphing a totally different message, and now you're even starting to see the shift that maybe we see interest rates increase in the back half of this year. And that's even a bit of a challenge because the new Fed governor, Kevin Warsh, is in, and that's a Trump elect. He's been pretty hell bent on cutting rates, but again, the market's going to send that message of saying what is the path of interest rates going forward. So the reason we talk about this is because if we see tighter economic and financial conditions, at the end of the day, that's going to be a pinch on consumer pocketbooks, and that's going to be a pinch on corporate bottom line. Still relatively early, but the things are starting to percolate here on inflationary sides.
Going back to the argument from 2020 of whether inflation's transient or not, and that was, I don't think we ever kind of came to the conclusion on that one, and we'll see again this year. I mean, it's hard to imagine the impact this oil price has had so far going away anytime soon. I mean, even if they announced a complete peace agreement tomorrow, from what I've read, it sounds like the actual oil that has been, because they can't produce any more oil because they don't have anywhere to put it. They don't have any more containers. They don't have any more VLCCs. The tankers are all stuck and full, so they can't actually produce the oil that they need to kind of distribute all over the world. And it's going to take some time for them to get all of that back up and running, which is definitely a months long or quarters long story, not something that can be rectified in days.
Yeah, the market's going to be forward thinking when they see a resolution in Iran, despite there being a bottleneck for the next 3 or 4 months getting supply back online. Prices will begin to reflect that there will be supply that comes online. Going back to your comment about transitory inflation. I mean, we talked about this a fair bit. Coming out of COVID, is that I still think that during COVID, inflation was transitory. It was event driven, which was supply chain disruptions coming out of COVID. And today's inflation that we're seeing, I forget what the latest inflation number was in the States, but it was kind of mid threes.
3.8, yeah.
That has nothing to do with COVID and the supply chain disruptions. That is almost entirely due to elevated energy prices, which is a new event-driven short-term inflation, in my view. Back in the 1970s, when we had inflation, last for a longer period of time, it was more structural in nature. And I just don't think we have that. So I do think that, if we do see, not if we see a resolution in Iran, I think it's when we see a resolution in Iran, we potentially see energy prices fall quite a bit. And we see inflation numbers. I mean, they're going to be trailing a little bit, but inflation numbers come back down as well.
Yeah. And when you break it out across the equity markets, the various sectors, there's 11 sectors that make up, kind of the classifications. And I think 9 of the 11, again, when we talk about earnings, have been exceptionally strong. And this threat of inflation, you'd think you'd see that in some of these bond sensitive names, whether that's utilities or pipelines, infrastructure, even bank stocks, yet they're not. In fact, a lot of those names continue to trend to 52-week or all-time highs. So, when we look at portfolios, I think they're extremely well positioned given the current backdrop. If we're still talking about inflation at 3.84% as we hit the fall, maybe that's that gives us a pause and say, what do we need to do in portfolios? Does that mean we lighten up on our equity exposure and take advantage of higher bond yields? But it's still a wait and see game, I would say, at this juncture.
Maybe another podcast conversation, but I think when I talk about structural versus event driven forces, I think a big thing at play here is AI. That's definitely a structural thing that's going on. And I could make a very solid argument that AI has more of a deflationary effect on price levels as opposed to inflationary. So I think, ultimately we move on from this Iran thing, but I think the AI theme and productivity boost that we get out of it, potentially have I'm not, saying we're going to have deflation, but it will be a pressure on prices that acts as a deflationary force as well.
Maybe let's switch gears and dive right in there into what we thought would be maybe an interesting conversation to discuss kind of how we're seeing AI impact our business and the ways that we're kind of using AI now to gain efficiencies and more specifically kind of thinking about employment is the big concern that seems to be out there in terms of how levels of employment are going to adjust when so many jobs are at risk. Craig, do you want to kind of kick us off?
Let me ask you a question. When you say so many jobs are at risk, what do you mean by that? Elaborate on that a bit, Jay.
Well, I think the major concern out there is just that AI is going to do, whether it's entry level kind of administrative jobs that are within our industry, or kind of the easy one that we see on the streets right now is the amount of taxi jobs and driving jobs and I mean I think there's some stat, I'm going to get this wrong, but truckers account for some incredible number of the workforce across North America. It's something like close to 10%, I think. And you've got Elon Musk making robo semi trucks that are going to potentially displace the need for those drivers. The taxi industry, like those are kind of like the most obvious that we see right now. I think within our industry, the potential for administrative jobs in the back office that are kind of very kind of data driven, I guess, in terms of what they're actually doing on a day-to-day basis. I think those are the jobs that are most obviously at risk, but I would say even further down the line when it comes to the impact that we've actually seen in some of the publicly traded companies that are kind of parallel to our industries. I mean, even when Anthropic announced their kind of newest version of Claude about a month ago, Raymond James stock, amongst many other kind of financial advisory businesses, fell. I think it was about 10% just on the day, and the concern there was, well, maybe you don't need a financial advisor anymore because you can just put all your financial information into Claude and it can tell you what to do. So those are obviously industries like ours are major employers as well. So I guess where do we see our industry kind of adopting AI, and where do we see kind of the jobs at risk and the job growth potential?
Well, I think before we dive into that, one of the things you talked about there, Jay, you talked about like, trucking and taxis, for example, and, these job losses because all of a sudden you have, a nobody driving this truck. I think what you didn't speak about with all the jobs that back that up. So you potentially lose one driver of that truck or one driver of that taxi. But how many other jobs do you create as a result of creating those kind of efficiencies from a transportation perspective? And just as you were saying that, I was thinking, I mean, this story is years old, but you think about rapid transit here in Vancouver, so SkyTrain. I mean, for years they've been driverless, whereas some other cities like New York subways always have a driver. But think about like the command center for that. How many people are employed in the command center that are monitoring all those driverless trains? Think about who's developing the technology to make that, to make those trains drive efficiently. As that system runs efficiently, we continue to build more lines, and there's more workers coming on board to manufacturing driverless trains. And I think if we look back in history, and whether it was a printing press, whether it was Henry Ford in the production line, whether it was recently, recent history in the late 1990s, the build out of the internet, and there was all these fears about everybody's going to lose their job. But what actually came out of every one of those, major industrial changes was actually net employment that came out of this. And I think every time we go through something like this, it's like this time is different. Is that, we're going to have 30% unemployment because certain people are going to lose their job. But I think we create, a ton of new jobs out of it. And I think, kind of as a segue into, the second or the question you asked, which is what's going on in our industry, I think, let's talk about our business at Plena, ourselves is that, I think where we're using it right now in its infancy, at least, is, as you all know, our industry is extremely administrative and regulatory burdened. And, a lot of our, the great people on our team here spend a fair bit of their day dealing with information and paperwork that is way too burdensome. And that's where we're actually finding these, quick wins or low hanging fruit, allowing these people to free up some of their time so that we can focus on what we want to do more of, speaking to our client, more of a human interaction, piece as well. And, second to that is, as you both know, I mean, we've just made the decision to hire somebody and bring them onto our team whose job is, probably more than half that person's job is going to be looking at AI and finding ways that we can enhance what we do using AI. So, I mean, our practice, we're probably a net one addition, because of AI, while at the same time making other people's jobs more efficient so that we can continue to do what we do for our clients even better than what we do it today. That's my view.
Yeah.
And
I think it's spot on, Clark, because you mentioned the 90s, 2000s. Look at how the wealth management or the stock brokerage industry has changed. Back in the 90s, it was the era of the stockbroker, and that was a transaction-based business. It was buy this, sell this. You migrated from there into the 2000s, where there was the proliferation of mutual funds. From there, you kind of developed into separately managed accounts where you kind of had access to a portfolio manager. The industry is completely changed to where we are today, and it's collaboration of coordination of all things that facilitate wealth management. I'm a firm believer AI is going to take over the ability to look up the previous earnings of Microsoft. You don't need an analyst per se necessarily to tell you what historical data is on that. But you look at the different segments of wealth management, whether that's tax planning, estate planning, investment management, and having someone collaborate and coordinate that. I think that's the era we're in today, and there's going to be more demand for that going forward. And so much of that is based off of the emotional side and the human side of it. AI can't replace that. And I even think one of our competitors here in Canada, their new marketing slogan is called the human touch. And I think you guys can relate to this just as much in the Vancouver office as we have here in the Kelowna office. How many clients say, thank you for answering the phone, right? And that's a lot different than a lot of these other businesses that have become automated, whether it's your local telephone company, your credit card provider, or an airline company. All of us get stuck in voicemail jail for minutes, if not hours, with all as we want is the ability to talk to someone. I don't think that's going to change in our business. Parts of it will, but I don't think the human interaction is going to change.
you hit it right on the head. I mean, how many times have I banged my head on the wall in frustration calling? I won't mention
Yeah.
any of our local telecom companies' names, but calling them or calling my bank. And I get this AI driven. This is, some companies using AI, I think, the wrong way, which is to replace that human touch, Craig. And you get a phone call that says, "Hey, what can I help you?" It's AI talking to you. What can I help you with today? And you say, "Well, hey, I just want to talk to a human." That's actually what I say. Can I speak to a live
Yeah.
agent?
Speak to
What
human.
can I tell this live agent you're calling about? Oh, I've got a billing inquiry. Oh, and it says, "Hey, you want to add a new service?" No, I don't. I just have a question about my bill. And you get caught in this thing for 5, 10, 20 minutes. And, again, I think your point there, which is, the human touch is still extremely important. I think using AI to, create efficiencies in the other parts of your business, which increase your ability to have human interaction, I think is, at least in our practice here, where we're going to take AI.
Yeah, and I think what's important to understand, I mean, what we work in with the markets, I mean, the markets are not a mathematical equation, as we all know. You can't look at Microsoft earnings, as you mentioned, Craig, and it's not A plus B equals C. It's here's the earnings, here's the totality of what the market's trying to tell us, and then we've got to ultimately make a judgment call when it comes to buying or selling various investment opportunities or applying an asset allocation strategy for a client. There's so much ambiguity in there with everyone's personal situation being considered that an AI, LLM or some software that can kind of look at all of the information that you provide it still has to come up with a judgment call ultimately. And the more time that we have, like you said, Clark, to speak to our clients to understand their situation, the more time we can help kind of provide that advice, which is ultimately what we're trying to do. So I think there will likely be more opportunity for advisors that continue to adopt AI and use it to their benefit. And I mean, as we mentioned, a few examples of areas where we've already kind of adopted the low-hanging fruit to analyze the markets in ways that we used to spend way too much time doing. And I think I mean, it's hard to imagine, at least in the near term, employment at our business going down because of AI. I think it's really just going to really encourage us to produce more efficiently. And I mean, that's what we're seeing at this point. We'll see what that looks like in a couple of years as these tools become more advanced. But at least for now, we're seeing employment demand increasing.
And to tie it back in, that's I think it's trying to predict what the labor force looks like or the workforce looks like, 3 years from now, 5 years, 10 years from now. No one would have thought an Uber driver existed a few years ago. I was down in Ridge Meadows with my son's baseball team, and right beside our ballpark was a massive Amazon warehouse. No one would have thought that that would have employed how many hundreds, if not thousands, of people with a steady stream of Amazon vans driving out of there, delivering goods to the end user. So it's transformative. I think that's the key message here. No one knows what it looks like, but to your point, Clark, I don't think 2 years ago we would have thought about hiring a new team member that has experience and can educate us in how to utilize AI. That's a new hire, and that's not even at our level. You see that at large firms like Raymond James, that some of the new hires are AI coaches. Who would have thought?
Yeah, and I think it's, if you go kind of a little bit broader and you talk about, whether it's, British Columbia or Canada as a country, I think, you have to, in my view at least, you have to have that shift, which is rather than seeing this as a threat, seeing this as an opportunity. And,
Yeah.
as a country, we've got an opportunity here, on the build out of AI infrastructure, with everything that's going on globally and geopolitically right now, our ability to become less reluctant on some other countries for some of this stuff. Again, we have to have the mindset to see this as an opportunity. And just like we're doing with some of our energy infrastructure, look at ways that we can invest in technology and AI infrastructure as a country. And, that's looking at things kind of from a, glass is half full perspective rather than glass is half empty. And I think that's what we have to do. I don't know if you guys have seen the stories here in Vancouver or BC about, AI data centers and the controversy around that, similar to the controversy that's going on in California right now. But I mean, that's a really good example of kind of where we probably have to go, as a country or as a province or as a city to, see the benefits that we can see out of this new technology.
Well, isn't that big threat? I mean, maybe you guys can comment, being a little closer to home there. Isn't the big threat there, like you say, water and plugging into the existing energy grid and what the impact will have on that? Like,
Yeah, so I mean, obviously these data centers are incredibly energy intensive, and they also require a lot of water to cool off the computers that are running nonstop. So just recently, it was announced they're building a massive data center actually right downtown Vancouver. in a strange place, I think is my immediate takeaway was why put this right in the entertainment district near the stadiums where they're going to have where there's already demand for housing, obviously, and I'm sure there's some justification in terms of being close to businesses to avoid additional latency and that sort of thing. But kind of right next to BC Place is going to be built a multi-story building that apparently they emit a whole bunch of sound as well. They're always kind of humming and buzzing, and in a city where, I mean, we're already on stage 2 water restrictions. We can't water our lawn, but we can now expect an increasing demand for water from a few more of these data centers. I'm sure they won't be the last. So I think it's the smart adoption of these types of technologies. Like you said, Clark, we've got to make these investments if we want to remain competitive. Whether or not they need to be right downtown or in Mount Pleasant, I think is the other one. Maybe is a bit of a question mark, but we're going to expect to see more of these, and these are going to, again, drive the economy and drive productivity and growth, and their investments that need to be made. Just kind of some questionable locations that were picked.
Well, a couple comments from Jay. I think there's one that's, slated for next to BC Place, and there's another one, Mountain Pleasant, I think another one up in Kamloops, is that this is not new. I mean, we've been building data centers downtown Vancouver quite quietly. There's a fair number of them, maybe not as large as these. I think the other thing, and I'm just kind of going out on a limb here, think about kind of the post-COVID environment where a lot of office space is vacant because of still what is a work from home or hybrid work environment. Maybe that's the argument, is that there's some empty space in cities that can be utilized in a different way. Going back to the investment side of it, the water use, I think that is a big issue, but it's like every other controversial project out there. I think we have to balance the economic realities of the world with the environmental side, water shortage side, whatever it might be. And I'm positive on Canada that we're slowly starting to take a better view on that. But going back to the investment side of it, I think the big issue, as you mentioned, with some of these data centers is that, particularly in certain months of the year, the heat that gets emitted is quite high. And historically, they've used water to cool these things. And the problem with it is, as water kind of rips around these things, it can't be reused, at least as it is now. I think 80 to 90% of that water evaporates, so it can't be recycled and reused. That's a big issue with these. Now, that being said, the new data centers that are being built, there's new technology that people have been innovative to solve this problem. And now 80% of the water, rather than being evaporated, is reused with better technology. And, again, I think that if people have the right mindset on and think about the glass is half full and how do we effectively take this opportunity, but balance it with, issues with water, issues with electricity, issues with noise or whatever, we come up with a pretty good solution. Way better than, I think the issue in California right now is let's just not build them. And what does that do for innovation? What does that do for competitiveness of the state? If we just took that approach here in BC, well, guess what? Alberta and Saskatchewan are probably going to build them. And, I think, again, we just have to have that mindset and do it properly.
Have these projects not been green lighted, or they got the go ahead already in support by the federal and provincial government? Am I reading that right?
Jay?
I think the recent ones were federal government and TELUS actually was the other partner.
Investment. Yeah.
So that's the one in Vancouver. That's right. Yeah. The other issue that comes up is, if there is demand for electricity on a grid that is really, there's not a lot left of that grid these days. The argument is that other, rates in general go up because there's more demand and supply hasn't increased. And, I think there's ways to tackle that problem. What you don't want to see, and this is one of the big issues here in BC and also in California, is, rates in general have gone up, not just for those that are using more and more of this power, so those data centers. And I think you do have to have a solution for that where you keep, the retail or residential rates for electricity and water, kind of pushed down. You can't have people like the three of us and our clients share the cost burden of that significant increase in demand for electricity. And I think that's part of the conversation as well. And, ultimately we're going to find a solution there.
Well, a lot of the new data centers actually have their own power plants kind of being built into them. So that's another kind of interesting kind of investment component to it, where not only are they building this whole thing up, but they're building the power production right alongside it. So again, I think it's just you know, Canada could be so important in this whole kind of build out with the amount of water that we have, the amount of relatively cheap and abundant energy we have. Canada could definitely be a leader in this space.
Well, I think it ties into what we've been talking about for a number of years, is enhancing Canada's productivity and our investment into infrastructure, right? We know that we've had very little, if any, foreign investment in the Canadian landscape, and you know, in my opinion, these are kind of the green shoots, as we often talk about, of like you said, Clark, as you know, potentially going in the right direction here in Canada. These are the things. They're going to receive controversy as well, but it's finding the right balance of capital investment to support economic growth.
There's always going to be that kind of not in my backyard mentality.
Always.
And, you know, I think it has to be, you know, maybe in my backyard if we do it correctly, but if it also creates employment for my community. And I think, you know, that TELUS federal government project, there's going to be 1,000 construction jobs that come out of that wouldn't otherwise be there if we didn't have that mindset that we need to make this investment. And I think if you think about where we actually have water, we have, you know, land, for example, I would agree, Jay, you know, building it downtown Vancouver, I mean, that's another day's conversation maybe, but think about up in Kamloops, think about, you know, some more rural areas where they have land, they might have more access to water, but they also have a community that is looking for employment as well. And again, I think if we just kind of balance things properly, and I feel somewhat positive that we're starting to slowly take that approach in Canada. We could be a net winner here, as opposed to, you know, what we've seen over the last decade, which is this feeling that we've fallen behind a bit.
Well, we'll find out what that looks like, and you know, maybe if the golf courses have brown grass and you guys are bathing in Howe Sound, we'll figure out what that looks like.
Well, I wouldn't like to see Jay's response to golf courses having brown grass, because
you'd rather not shower than have a burnt green.
Yeah, exactly.
All right, well, that's an optimistic place to end this episode on. Hopefully next month we'll be celebrating a Habs Stanley Cup win, one remaining Canadian team for us. So as always, thanks for listening. We encourage your feedback. We'll see you next time.